The Federal Reserve, when they cut interest rates, it doesn't necessarily dictate the interest rates on a mortgage.
What happens if the market doesn't crash? What happens to your debt today?
What I often get asked is, how do mortgage rates work? How do I know when the interest rates are low? How do I know when the interest rates are high? One of the things that we look at as mortgage professionals, the main source for us to dictate whether or not the rates will be up or down that day is the 10-year Treasury yield. Now, a lot of clients that I have, they'll say, hey, I'm gonna wait for the Fed to cut interest rates. The Federal Reserve doesn't necessarily dictate what the interest rates on a mortgage are going to be. We saw last year 3 rate cuts happen by the Fed, and the interest rates went up actually towards the end of last year. The best indicator that we have, it's not a perfect science, is going to be the 10-year. And today we've seen the 10-year Treasury yield be the lowest that it's been in the last 5 months. So right now it's a really great time to start looking into purchasing your next home. If it was me, if I was buying a home right now, I would do it right now. And the reason why I would do it right now is because, like I had mentioned, the 10-year is down at the moment, and it's the best that we've seen it in the last 5 months. But there's also a very slim buyer's pool right now. There's an affordability issue that's happening in the United States, and if you're able to get pre-approved to buy a home, now you're going to get a much better price than if you wait for the market to crash. While your interest rate might be lower, your purchase price will be higher. So why not acquire the asset now while there's less competition for you to get that awesome home that you want? And also, if you wait for the interest rates to come down, most likely the purchase price of the home that you're looking to get is going to be more. We're also seeing right now during this market, the sellers that are selling are willing to negotiate more concessions. So the likelihood of you getting the concessions that you could get today when the market crashes is highly unlikely. When the market crashes, those sellers then become more valuable. Those homes become more valuable because of the fact that they're going to have more offers because more people can afford to buy a home. So if we can get you pre-approved now, you're in a much better position to be able to acquire the asset that you love, and you'll get a better price for it.
The Fed reducing interest rates does not have a direct impact on mortgage rates. There are other economic factors like inflation, unemployment rate that impact whether interest rates go up or go down. So just because the Fed reduces interest rates, it doesn't mean that mortgage rates go down. Sometimes that information is already priced in from months ago. So I think speaking to an advisor and speaking to someone that understands the market can help you get what you're looking to accomplish today. Whether you're looking to refinance or purchase, we can find the best possible option, whether the Fed cuts rates or increases interest rates. So now is the time to take action. If you're looking to purchase a home today, rates have been the lowest since April of this year. And this can save you thousands of dollars by taking action today.